Welcome to Markets Now. I'm Michelle Rourke with Mark Schultz, Northstar Commodity. Grains all lower on Monday. We were mixed over in the livestock futures. And let's start off talking a little bit about the grain trade. Wheat futures were down the most, kind of set the tone for the grains. How much of that was weather, Mark?
I would say the weather was probably 100% of it at this point. We went home on Friday with the intentions that we still had a drier trend unfolding in parts of Europe, far eastern Europe, into Ukraine, although they had picked up a little bit of moisture, but Russia was still on the dry side, expected to stay that way. And they ended up with some very good moisture, and in some places excessive amount of moisture, flooding reported in parts of Romania, Poland, parts of Ukraine. So excessive rains that fell there, and that's definitely what they needed, and enough probably to end it as a drought buster for right now. So and it comes at a time period when they needed it, because they had about another 30 to 40 days before winter wheat seeding would be come and go. So they're going to get it at a timely fashion, and that set the tone for the markets today.
Yeah, and it kind of overrode some pretty good export inspections this morning. But from a technical standpoint, I mean, we'd had like an 80-cent rally off of the lows in Chicago. Wheat kind of got up into resistance right under that $6 mark too, didn't it?
Yeah, very good point. The wheat market has had a very enjoyable move on up. It fit 80 cents, 85 in places on the wheat. So it was doing quite well. This $6, $6.10 is going to be round up to $6.20 is going to be your resistance level on D Chicago wheat. You know, we'll get a pullback. I think it's going to be interesting tomorrow to see if we get something that can turn around on a turnaround Tuesday, and we'll see if it's a 1 day or a day and a half correction on the wheat market and we start to move higher. Because I did think that the wheat export business, quite frankly, has been okay. I'm a little more surprised that Russian wheat prices are still staying as low as they are, and they're still exporting out wheat for a time period where you think that their crops should start to be, or inventory should start to get pretty tight, but they're still moving it out.
Little weakness in the corn as well. Did it just follow wheat, or was that some profit taking maybe?
Maybe a little both. I think more so I'm following the wheat market, probably more so than some profit taking. There's been a little bit of money made on it, and of course you're going to run into resistance on December corn at that 420 to 425 area. If you start clearing that, then things start to look pretty impressive on it. But with harvest right around the corner here and getting started, especially in Ohio, some in Indiana, wherever it's dry, because it's been a pretty warm, dry pattern here for quite some time now for a vast majority of the central Midwest. So this crop dry down is happening at a pretty rapid pace.
Is that being offset by some of these really good yields we're hearing coming out of parts of Iowa and Illinois, though?
Well, I think that the yields are expected to be record-breaking yields, and that's at least what we're hearing right now, is that they're very good. We're not hearing very limited on people who are disappointed. The problem is there's just not enough taken out yet to really set the tone here. But I will say this: those who have harvested in this parts of Illinois, Iowa, Missouri, some in Nebraska that have taken out corn have been very, very pleased with the yields.
And the soybean market certainly has gotten some help here recently from export business. We got another, almost 5 million bushels again this morning on the flash report. But again, we can't take out overhead resistance. And so where do you see that market going from here?
Well, you're holding it at 1004 on the beans here. A 995 short term is your short term support. Your resistance is up at about 1030 to 1040 on the November beans. I think you're kind of caught in a little predicament here, and that is you're right getting into the thrust of the harvest, and it will only pick up as the week unfolds. So unless you start seeing some surprisingly poor yields, and that is all over the place so far of what's being harvested. Otherwise, if the market starts to move higher, those who have the good yields, I would only suspect that there will be some selling of the beans. So I think you're going to get some harvest pressure offset by this. So even so, we have a 53 bushel per acre bean yield. Basically, in this country, it's a record yield, and they're going to be hard pressed to change things until something else significantly flips on the weather or outside market activity.
Yeah, and it's a little too early for the South American weather story to push us over these resistance areas chart-wise that you just talked about, right?
Yeah, that's how I see it. I still see South America. I mean, the technology and their ability to plant a more percentage of the crop in a week has grown just like it is here in the U.S. I mean, 7, 8 years ago, they could do 10 or 15% of the crop getting planted in a week was a good week for them. Now they can do 20, 25% pretty much with ease in here. So it can get done in a hurry. Once you flip the calendar to October, that's would probably be more of the critical time period to watch, because then it starts, the clock starts ticking on whether they get the beans, and not so much for the beans, but the beans need to go in by the month of October, or else you're going to get too late. And then for the bean harvest, and then the Soybean corn getting planted outside the optimum window, and that's how you start to build some potentially something more to the friendly side of the market.
Gotcha. So you mentioned harvest pressure in soybeans. Do you see more soybeans being just sold off the combine and maybe corn tucked away, or what's the scenario there you anticipate?
Well, there's a pretty good carry to the bean market, and there's a good carry to the corn market. So I think it depends on what they have. Again, I think if you have a producer who has 65 to 75 bushel acre beans, you're going to see him sell some beans. If you've got somebody that's doing 45 to 55 bushel per acre, he might be more inclined to say, I'm going to stick them in the bin. He'll take his chances. He's got the insurance coming up starting the 1st of October to determine what the price is through the month of October. So I think he'll be more sit back. But the better yielding farms, I could only anticipate, will have a storage crunch, and therefore they will be forced to make some sales of the beans and or the corn.
Gotcha. NOPA crush was out this morning. It was disappointing in terms of the crush figure, but we had bean oil stocks below expectations as well. So kind of a wash, you think?
Well, kind of a wash, but I thought the crush down to 158, I believe it was much lower than what the trade was anticipating, so that hurt. And yes, you had the soybean oil inventory tight. I'll give it credit for that, but if you want to make the bean market move on up, it has to be more, in my view, meal has to be the leader over the oil. The oil basically never takes the bean market sharply higher. The meal is the one who pulls the market up. But with that said, the crush margin is still pretty good. And also, I will say this, technically on the charts, the meal's not bad looking either at this juncture. I think it should be lower, and it's simply staying up better than I would have expected.
Yeah. We should point out that on the Commitment of Traders report, funds continue to kind of get out of their short positions in much of the grains, don't they?
Yeah, and that goes back to what I think is happening, and that is the pattern of the markets has changed. From the start of the 1st of January of this calendar year, they were selling any rally there was on the markets. And now it looks like the corrections on the beans, one day in the last, 24 trading days, one day down is it. Otherwise, the next day is up. So we have it looks more like the funds are looking to be buying the dip, not selling the rallies at the present time.
Definitely can feel that change. Let's talk about the cattle futures. Live cattle kind of disappointing, considering you finally look like you put a low in this cash market, but the futures did not respond to that today, nor the fact that we had some higher box beef values at noon.
Well, I would say I'm still, cash is king in this one here, and the cash holding up. So yes, if I want to look at it from the futures compared to what the cash did last week on price, yeah, I would be a little disappointed. But overall, we're still fine. I mean, it still looks like there's a possibility. I think you need to clear 180 on the December cattle on the technical side, and then I think you've got something that you can build from there. You have to keep in mind too here, we're still cattle weights or live weights on the cattle still going 38 pounds heavier than a year ago. We're importing beef like crazy into this country. So if we want to go back to seeing $190 cattle, I mean, the weights can't stay up 39 pounds above a year ago. You have to correct that. And I understand that you got cheap feed, so it's easy to get caught into that routine and feed the cattle a little bit heavier because it pays to do it. But in the meantime, you can't expect to have a market that's going to go sharply higher at the present time unless you can flip the currency situation and where the US dollar goes down and other currencies going up, and we slow down our imports of beef and we increase our exports of beef. That's how you win the battle.
Gotcha. What about the hog market? We've been kind of chopping around. We did manage to end a little bit higher here today, but do you think the funds are done buying because they were the ones that produced this big rally that we had, and now seasonally you're starting to see cash and cutouts turn over?
Yeah, the cash and the cutouts kind of flipping around here for a little bit, but overall in the big picture, they're trending a little bit lower on here. And that's, I think sometimes you can always get a little bit of a bubble, or a little bit of a pop into the first parts of October. But once you get past the middle of October into November, December, the numbers just simply become a little bit overbearing in here, and that makes it difficult. Now, here too, we have the problem, and that is the hog weights have been heavier. We're nationally about 5 pounds above a year ago. I mean, that's equivalent to having 23,000 more pigs on a weekly basis going to market just with the extra tonnage. So again, here too, what you do have is you have the cash index at about 84.50, and you've got the October futures and even the December for that matter, all trading at a significant discount to where the cash index is. So here's where if you can get the cash or the cutouts to at least stabilize and firm up just a little bit, you'll pull the index up, which then in turn will pull the futures up as well too. So one thing that did change a little bit today, and that is for the first time since all of last week, you saw bull spreading working in the hogs.
Okay, why do you think that is?
I have no idea but it was to a level that was pretty good. Otherwise, if you really look at the markets and look at the charts on here, now granted, you've had a $10 move off of $8 to $10 move off of the bottom. That's impressive since we put the lows back in July and August. But lately, if you just look at the last 10 trading days, 12, you really aren't doing much of anything on the hogs. You just got to chop around and really setting no direction whatsoever.
Yeah, I agree with you on that one. All right, thanks, Mark. Mark Schultz, Northstar Commodity. That is Markets Now.